Hey everybody, hope this finds you doing well. This is Danelle here at Networkchain. We're going to go ahead and jump right into the cryptocurrency market update along with some of the news of the past week. Bitcoin, as you can see, is currently trading at around $107,000. It's down 3.5% over the past 7 days. Ethereum still has yet to be able to break above 4,000 since we had that major downtrend a week prior, and it's still trading at around $3,800 right now, but it's actually up over 3% over the past week. We have XRP is down 1%, Solana is up about 5%, but still hasn't gotten back up to 200. It's currently trading at 187. Then you have Dogecoin, the largest meme coin of them all, currently trading at around 18 cents, and you see Cardano rounding out the top 10, currently trading at around 63 cents, basically where it was this time a week ago. So if we look at the Bitcoin charts, many people are trying to speculate what is going to happen next. October, which used to be called Uptober, is not so Uptober, at least not right now. We're seeing volatility, but we did have a little bit of an unexpected uptrend in August and September. So it was likely that we were going to have some volatility at some point before year end, and it looks like October is definitely bringing it. We definitely saw what happened last week when it came to the $19 billion liquidation because of the fall of crypto, but we are starting to see if we are going to have some stabilization or if we have some more downward movement to come. Now, if we look at Bitcoin, you can see it's currently trading around that $107,000 level. It could still potentially try to come down to that $99,000, $100,000 level where we did have support previously back over the summer. So we could potentially have that happen. Obviously, we don't know, but that's definitely a possibility to consider. But also we can see that Bitcoin has yet to be able to break that 123,000, 24,000 and continue to close above that level. So we're basically waiting to see if Bitcoin can finally get a chance to get past these all-time highs and then go towards price discovery. But we would need to see some of these daily and weekly candles closing above this line. So that still remains to be seen. It could happen in the next several weeks. It could happen before the end of the year, or it may not happen for another couple years. Who knows what's going to happen? But right now we are seeing that we're still kind of in this range that we've been in basically for the second half of 2025. So we still have a couple of months left, obviously, in 2025. So many people are still optimistic, but there are some that are calling for the top being in, and that we could over time start to see Bitcoin come back down, maybe even testing these levels back to the $80,000, $84,000 range in due time. We shall see, obviously, but definitely just something to keep an eye on when it comes to Bitcoin. We HODL, so we invest in Bitcoin. So these price movements over the last several months, several even years, actually, it doesn't really matter so much as long as we start to see and continue to see the incremental value that's coming through Bitcoin over time. When we look at the top assets by market cap, gold is definitely at the top of the list. We can see that it's now currently trading at around just under 29 trillion, but it did actually hit that 30 trillion mark last week, and it actually hit $4,300. We actually saw videos of people all around the world actually waiting in line to buy physical gold. One thing and one reason why people are really excited about Bitcoin being so-called digital gold is that you don't have to carry and buy these bricks of physical gold. It's obviously much more difficult to transfer if you wanted to travel around the world holding and have access to your value. It's a lot more difficult to go somewhere and take a bunch of gold bricks, take it on a plane or whatever you're trying to do, and then find somebody that's willing to buy it from you, as opposed to Bitcoin, where obviously it's all using the internet, and so you can transfer that value peer to peer very easily, just using your mobile phone. So we definitely see that there's the technological advancement when it comes to Bitcoin compared to gold, but obviously gold has always been, or at least for a long time since we went off the gold standard back in, I believe, 1970s, during the Nixon presidential run, that we saw that we went off the gold standard, and since then it's basically been looked at that as a store of value. So Bitcoin is definitely coming along with that narrative as well. Obviously, we continue to see over time if that's going to continue or will be true, and if it will actually become an inflation hedge over time. But obviously, it's outperformed the dollar dramatically. It is currently trading at around that $200 trillion level. So we're just about 1/13th of gold. So if Bitcoin does eventually reach that level of gold when it comes to market cap, we still could see a 12 to 13x from here. So obviously time will tell, but we'll continue to keep you posted. But we are seeing that gold is on a major run right now, having one of its best years in a very long time. Visa just recently released their report regarding stablecoins. So Visa is one of the largest payment processors in the world. One of the biggest credit cards taken pretty much at most vendors around the world that do take credit cards. Visa definitely is a part of that network, and you can see here that they are understanding the growth and the importance of digital assets. And so you see that they have come out with a report related to stablecoins and how there is a growing lending opportunity on chain using the blockchain. So it actually does kind of tie into what happened with the $19 billion of liquidations. We'll get to that in a moment. But as you can see here, stablecoins have evolved from crypto trading tools to foundational infrastructure powering a new lending space that has grown rapidly in the past year, processing over $500 billion loans to date. So this paper examines stablecoins, lending protocols, how it can modernize the global lending ecosystem, making it more transparent, efficient, and accessible. Banks and financial institutions represent both an opportunity and an imperative reason to understand how programmable money is reshaping credit markets through case studies of leading protocols and analysis of on-chain data. They're now basically using this report to show you a little bit more information about how moving to this technology could definitely be the next wave. So you can see here the founder of Visa says the real revolution is not in electric money, but is in electronic trust. So basically, we're going to be removing a lot of these middle men and women when it comes to trusting outside parties and third parties with our money. And now we're basically going to be able to use programs that automatically will do certain things via the smart contracts and how it's programmed. So Ethereum, for example, is the largest smart contract platform currently by market cap, and you can program Ethereum to be able to do certain things. So, for example, with stablecoins and with crypto lending, basically you can use the smart contract, as you can see here, to be able to loan stablecoins, for example, to borrowers without the need of a third party or an outside party. So you can see basically how the flow goes. Lenders will deposit stablecoins into a managed smart contract pool, and then those and they receive interest for the money that they're loaning out, basically. And the money that they're loaning out is then going out to these borrowers, and they have to put up collateral. So this now ties into what happened a couple weeks ago with the $19 billion liquidation. So that's why you still have to be extremely careful when you're borrowing, when you're taking out funds on margin. So in this case, if you took out a certain amount of money and put up a certain amount of collateral, and say you had some of these altcoins out there and put that under as collateral, if those altcoins start to hit a certain level and they drop to a certain level in price, then the smart contract will start selling that collateral to be able to make up for the money that is owed in a particular lending contract. So it obviously differs depending on the type of loan that you're getting, but there's definitely a possibility that your collateral could be sold off. So you still have to make sure that you have a clear understanding of exactly what you're doing when it comes to crypto lending, particularly using some of these on-chain protocols. Right now, I believe Aave and Compound are two of the largest decentralized platforms that a lot of lenders are using. You can see over 1 million unique borrowers. The average loan size is around 76,000. There's been over 8 million, nearly 9 million total loans. And you can see that over the last 5 years, approximately $670 billion has been transacted when it comes to stablecoin lending and lending in general when it comes to on-chain. So you can go to the corporate Visa website and dig deeper if you prefer. And we're seeing more and more institutions and banks and payment processors like Visa are really starting to do the research and really try to get an understanding of digital assets and blockchain technology and all of the benefits that it's going to bring to consumers as well as lenders and borrowers and payment processors as well. You can see that PayPal has their own stablecoin. And they're utilizing the blockchain. There's a lot of different brokerages now that are opening up crypto services. Morgan Stanley just opened up their crypto services to not only their wealthy clients, but all clients for crypto trading. Charles Schwab also mentioned that they will be opening up more opportunities to buy different types of crypto, not just the Bitcoin ETFs and Ethereum ETFs. So we're continuing to see the expansion of crypto. And just lastly, as you can see here, that the IBIT ETF is doing extremely well. It's in the top 5 of all ETFs in the US and basically around the world. It's done nearly $28 billion worth of flows over the past year, and currently they have about $93 billion in net asset value, and obviously that fluctuates. It reached 100 billion at one point in time. Now it's kind of come back because obviously Bitcoin price has gone down. People have been selling out over the last couple of weeks, but we could potentially see a spike back up towards 100 billion before the end of the year. But we're definitely seeing the demand is there, and we look forward to continuing to keep you on the journey. Hope all is well with you. Thank you so much for watching, and take care. Bye-bye.